If you own a cleaning business and you've ever been denied funding or you're worried about getting denied, this video is for you. A lot of cleaning business owners assume the denial only happened because of credit, but that's not always the full story. Many cleaning companies get turned down because of cash flow issues, inconsistent deposits, too much existing debt, low time in business, weak bank activity, or simply applying for the wrong type of funding. In this video, I'm going to break down how cleaning business owners can get approved fast, what lenders are actually looking for, the common mistakes that slow down approvals, and how to position your business so you can access the capital you need. Now let's get into it. Running a cleaning business takes capital. You may need money for equipment, supplies, payroll, marketing vehicles, hiring staff, or expanding into commercial contracts. Even if your business is bringing in revenue, there are still expenses that need to be covered to keep operations moving. Many cleaning businesses owners look for funding when they are trying to grow or stabilize cash flow. But just because you need funding does not mean you will automatically get approved. Lenders are looking at how strong and stable your business is before they make a decision. One of the biggest factors lenders look at is cash flow. A cleaning business can have jobs coming in and still struggle behind the scenes if cash flow is tight. Maybe customers are paying late. Maybe payroll is eating up most of the revenue. Maybe expenses are higher than expected. Lenders pay close attention to this because cash flow determines whether your business can handle repayment. If your cash flow looks inconsistent or strained, it can slow down or hurt your approval chances. Strong, steady cash flow puts you in a much better position. Another major factor is your bank activity. Lenders review your business bank statements to understand how money flows through your business. They want to see consistent deposits and healthy activity. If your deposits are all over the place, too low, or unpredictable, it raises concerns. Frequent overdrafts, low balances, or negative days in your account can also hurt your chances. Your bank statements tell the story of your business, and lenders use that story to decide whether to approve you. Another thing lenders look at is your current debt. If your cleaning business already has multiple loans, advances, or obligations that can make lenders hesitant, even if your business is generating revenue, too much existing debt can make it harder to get approved because it puts pressure on your cash flow. Lenders want to make sure your business has enough room to take on new funding without becoming overextended. Time in business is another important factor. A cleaning company that has been operating longer generally looks more stable than a brand new business. Many lenders prefer at least a few months of operating history so they can review your performance. That does not mean newer cleaning businesses cannot get funding but it does mean your options may be different depending on your situation. The more history you have, the stronger your profile looks. A lot of cleaning business owners think credit is the only reason they get denied. Credit does matter, but it is not everything. A business with average credit can still get approved if the revenue is strong, deposits are consistent, and the overall business looks stable. On the other hand, a business with decent credit can still get denied if cash flow is weak or debt is too high. Lenders look at the full picture, not just one number. Another key factor is applying for the right type of funding. If your business needs money for day-to-day operations like payroll, supplies, or marketing, then working capital may be the right option. If you need equipment, then equipment financing may be a better fit. Applying for the wrong type of funding can slow down the process or lead to a denial because the request does not match the business need. Understanding what you need is critical to getting approved faster. A lot of approvals come down to preparation. If you do not have your bank statements ready, do not know your monthly revenue, or cannot clearly explain what the funding is for, it creates doubt. Lenders want to see that you understand your business. When your records are organized and your numbers are clear, you immediately look stronger. Being prepared can speed up the approval process significantly. Many cleaning business owners make mistakes before applying. Some wait until they are in a financial emergency. Others apply without understanding their numbers or their debt. Some mix personal and business finances, which makes their business look less stable. Others apply to only one lender instead of giving themselves multiple options. These mistakes can reduce your chances of getting approved fast. Now, let's talk about how to get approved fast. First, keep your deposits consistent. Second, reduce overdrafts and negative bank activity. Third, separate your business and personal finances. Fourth, know your numbers, including your revenue and current obligations. Fifth, stay organized with your documents. Sixth, apply before your business reaches a crisis point. And seventh, apply through a platform that gives you access to multiple lenders instead of just one. These steps can significantly increase your chances of fast approval. Lenders want to see a business that looks stable, active, and capable of repayment. They want to see consistent revenue, strong bank activity, enough time in business, and manageable debt. They also want to see that you understand how the funding will be used. The clearer and stronger your business looks, the better your chances of getting approved quickly. Let's say a cleaning business applies for funding to hire more staff and take on bigger contracts. The opportunity makes sense, but if the bank statements show inconsistent deposits, overdrafts, and existing debt, the lender may hesitate. Now, imagine that same business improves deposit consistency, cleans up bank activity, and applies for the right type of funding. That same business may get approved much faster. The difference is often preparation and positioning. At the end of the day, getting approved for funding fast is not just about applying. It is about positioning your cleaning business the right way before you apply. When you understand what lenders are looking for and how to present your business, you can improve your approval chances and access the capital you need. If you own a cleaning business and want to see what funding options may be available for your company, check the link in the description. Like, subscribe, and hit the notification bell for more business funding content. And I will see you in the next video.